welcome back. You're watching The Burning Question this hour on India Today with me, Sriya Kundu. And we first up begin with the headlines doing the rounds at the very top. Big GST reply for Indians. Government simplifies the GST slabs. Your grocery shopping gets cheaper now. Tax treasure unlocked for Indians. Politics erupts over GST rate cuts. Congress calls GST cuts 8 years too late. Asks where were reforms when millions suffered. Yamuna River rages in Rajdhani, flows way above the danger mark. More water released from Haryana. Thousands move to relief camps. IMD issues red alert for capital. Prime Minister Modi abuse row intensifies. The BJP ups their ante against the opposition. NDA makes Bihar Bandh call. Tejashwi Yadav, on the other hand, is back at the Prime Minister. Super showdown ahead of the Bihar polls. Deluge, devastation and destruction. Worst floods in Punjab in decades now at least. 37 dead, over 3.5 lakh affected. Rivers swallow all 23 districts of Punjab, over 1,650 villages severely impacted. Now, as rains continue to wreak havoc in North India, here is breaking news that's coming in from Kishtwar, wherein a landslide hits Rattle Power Project workers' hutment in Kishtwar. 5 labourers, we are given to understand at this given point, are injured. Some others still continue to be trapped in this very hutment. Rescue operations are currently underway. These are the first visuals that we bring to you of the very landslide affected area in Kishtwar. Remember, it's a power project workers' hutment that has been crushed underneath this landslide. It's rattled this very hutment in Kishtwar. There are 5 labourers who have been injured, and these are preliminary reports, of course. Some others still continue to be trapped underneath the debris. The rescue operations are currently underway. These are the first details that we are bringing to you, where we have Mir Farid as well joining us on the broadcast to in fact take us through more details. Mir, help us understand what the situation seems to be like as this landslide seems to have completely affected and rather severely affected this hutment.
Well, yes, these are first visuals from Ground Zero in Kashtawar, where this landslide hit a construction worker site of the Rattle Power Project. Now, this is a big hydroelectric power project that is the work on which is ongoing, and we know the kind of havoc the rains have wreaked. In fact, across Jammu and Kashmir, even in Kashmir, there's a flood alert, flood-like situation in certain areas. But the hilly areas of Jammu have literally been battered by heavy rains. The result is that the soil has loosened, there's a lot of saturation, and thus these landslides are happening thick and fast. Now, in this case, a complete hutment was smashed by this landslide. Several workers were trapped. Been told that 4 have been injured, but they have been evacuated, taken to hospital. But there are still at least 4 to 5 who are in the debris. And right now, rescue operation is underway. They're trying to pull them out and take them to safety. Overall, if you talk of that power project, there is an advisory where they have been told to, in fact, take caution, adhere to official advisories, because it is located at a place, at a location where it is surrounded by mountains. So there can be an incident of landslide, and one already happened, and advisory for these people to be evacuated to safer locations, because right now landslide alert is there because rains are happening non-stop, and that is saturating these mountains, and that's why landslides, rock slides, mudslides are happening thick and fast. Back to you.
Mir, if you were to just take us through the terrain that we are speaking of in Kishtwar, we know the rains have been consistently wreaking havoc in these regions. How the rains have also been impacting these hilly regions in terms of landslides having gone up, and how that has also been disrupting the lives of the locals there, like this particular landslide that we are seeing. Viewers, more visuals now coming in as we bring to you on your screens. Mir, if you could just take us through that as well.
Last 15-20 days, we've seen incessant rains across Jammu and Kashmir, but especially the upper reaches, the hilly areas of Jammu. Most of the districts have large areas which make of there are mountains there are hills, and we've seen this rainfall saturating those mountains. Since last 15 days, we've seen many landslide flash flood incidents, and whenever flash floods happen, they bring a lot of rocks, debris with them.
Right.
We know what happened in Kashtwar already.
Absolutely, absolutely. Mir, I'll have to, in fact, interrupt you there, and thank you for all the details on this very landslide. We'll keep a track of it. But viewers, let me now, in fact, go across to Aabha Bakaya of Business Today TV with all updates of the markets. An all-new show. Aabha, over to you.
Thanks so much. Good morning and welcome to Market Opening on our brand new collab show between Business Today and India Today TV. It's just past 9 a.m. and we're here to get you ahead of the curve as markets kick off trading for the day. From the big overnight queues on Wall Street and global markets to the buzz around corporate earnings, policy moves and stock-specific action. We break it all down so you know exactly what to watch. Stay tuned as we track the Sensex, Nifty and stories that will drive the market mood today, and catch us again at market closing with my colleague Sakshi Batra. First, a look at the top news. The biggest reforms yet in goods and services tax cleared in just a day instead of 2. Markets are just as surprised as you and I are. All sectors from insurance to FMCG, agriculture to consumer durables are expected to celebrate the streamlining of the system. Reports say the new system could also reduce the government's subsidy burden. All middle-class consumables to be placed under 2 tax slabs instead of the current 4. Household goods, food items, snacks, ACs, TVs, fridges, medicines, all will be cheaper when the new GST rates and rules kick in 17 days from now. GST also slashed on small cars, commuter two-wheelers, construction materials and textiles. Industry body CII says companies will pass on the benefits of lower GST to consumers swiftly. It added that it will partner with the government to ensure a smooth, timely rollout that lifts demand and supports jobs. Rules on how goods in stock are to be treated will be issued soon. GST rates reduced on farm machinery and fertilizer inputs from the current 12% and 18% to just 5% and even nil on several food items. The move is expected to give a boost to rural demand and ease off cost pressures on farmers, and will have a cascading impact on the economy, especially in rural India. Small businesses gain big. GST laws changed to make it easier for small businesses to get registered. New rules also allow for quick refunds on provisional basis. Appeals and hearing process before the GST also streamlined, resolving a long-standing demand of taxpayers. Markets, of course, are going to cheer this news. Let's take a look at the pre-open and what it's looking like, what it's indicating. Expect a gap up. We're already seeing tractor maker Escorts at a record high. We're seeing Hindustan Unilever at a 52-week high. The Nifty is up over 1%, as was expected. That GST cheer kicking in already in pre-open. Remember, we're also seeing global cues and a expected cut from the Fed, and that's also leading to positive sentiment when it comes to global cues. But really the focus today will be on the impact on domestic counters, on the kind of cheer we're seeing post these mega GST reforms. Pre-open there, Nifty Auto 3.5% higher. It's really seeing a fantastic shift coming in post some of those norms announced last night. Huge for the consumption segment, so keep an eye out on auto, keep an eye out on all your consumer durables stocks as well. HUL already at a 52-week high. Escorts already at a live high coming in. So lots of action there. Keep an eye out on food items, for instance, and across the board in the broader markets, we'll be seeing that impact play out. But look at some of those auto names, top of the charts. M&M up 7%, iShares up 5% in pre-open, and we're just about a few minutes away from market opening today. It's looking good, and that cheer also moving across the markets. Your consumer durable majors, HUL up over 3%, ITC following suit as well, and we will also start to see short covering coming in as we see a gap up in the markets. Let's see then post that if we start to see some profit booking as well. But clearly we're heading in for a good open this morning post that GST news. The GST Council has pulled off in one day what was expected to take two, rolling out the biggest tax reform since 2017, led by Finance Minister Nirmala Sitharaman. The Council has simplified India's GST structure to just two slabs, 5% and 18%, with a nil rate for essentials and 40% for sin and luxury goods. Insurance premiums, life-saving drugs, basic foods like roti, paneer, these are all now exempt.
This reform is not just on rationalizing rates. It's also on structural reforms. It's also on ease of living.
It was expected to take the GST Council 2 days, the 3rd and the 4th of September, to bring about the biggest reforms in the goods and services tax. But it took just 1 day for the apex GST body, headed by Finance Minister Nirmala Sitharaman and comprising the finance ministers of all states, to reach its decision on sweeping reforms. 8 years after the goods and services tax replaced a slew of central and state taxes, subsuming them into one nation, one tax, the GST Council made the structure less complicated by replacing 4 tax brackets with just 2. The previous slabs of 5, 12, 18 and 28% will be replaced by 2 slabs of 5 and 18%. There will be a NIP slab as well and a 40% slab for sin and luxury goods.
All this will be effective 22nd September 2025, which is the first day of Navaratri. The changes in GST rates of all goods, except for pan masala, gutka, cigarettes, chewing tobacco, products like zarda, unmanufactured tobacco, BD, will be implemented with effect from 22nd September 25. Except for these,
insurance premiums, both for life and health policies, will now be exempt from GST. There is also total exemption of several life-saving, cancer drugs and medicines for rare diseases. Ultra-high temperature milk, chena and paneer and Indian breads like roti, chapati and paratha are also exempt. The 5% slab will include items for the middle class like hair oil, soaps, shampoos, cycles, kitchenware, household articles, food items, spectacles, man-made textiles and yarns, as well as items for agriculture used like pesticides, horticulture and agri-machines including tractors, and also on handicrafts, marble, granite, intermediate leather goods and renewable energy devices. The higher 18% slab will comprise air conditioners, all televisions, dishwashers, cars with engine capacity of under 1200 cc, two-wheelers with an engine capacity of under or equal to 350 cc, all auto parts, tractors, three-wheelers, buses, trucks and ambulances. As expected, sin and luxury goods including tobacco products, aerated drinks with added sugar, carbonated and caffeinated beverages, mid and large size cars, large engine two-wheelers and personal aircraft and yachts will attract 40% GST. IPL also moved to 40%.
A lot of industries have already come out and have committed that they will be transmitting this benefits too. Administratively, both at the state level as well as at the CBIC level, we will definitely be engaging with the industry and seeing to it that the benefits to the consumer, as is planned as per the exercise, is going to be transmitted to the consumers.
The government expects a net revenue to fall by around 48,000 crore rupees on consumption figures based in 2023 and 24. The centre, however, says the shortfall will be more than made up by the increase in economic activities.
We have estimated a figure. We expect that the net fiscal implication, we would not call it as a revenue loss because that doesn't seem to be the correct terminology. But net revenue implication of this proposal is expected, we have estimated it to be around 48,000 crores.
The GST rationalization comes at a time when the industry is facing global trade headwinds and fresh tariff hikes by the US have raised concerns about India's export prospects. Analysts expect the boost in domestic consumption to offset some of this impact. Bureau Report, Business Today Television.
All right, Gaurang Shah joining us this morning, Senior VP Geojit Investments. Gaurang, great to have you on the show. The impact on market sentiment and otherwise, the real impact, given that we're already seeing a spike coming in across those auto majors, specifically Eicher, Maruti, Escorts, and of course, consumer durables as well. And we'll dive deep into that impact later. But what is the kind of real impact you see on sentiment as well as on market returns on the back of these huge reforms?
Thank you so much, Aabha, for having me on India Today morning show. It's good speaking to you after a very long time. Good morning to all your viewers as well. So I think right from the time this announcement was made on 15th of August by the Honorable Prime Minister from the Red Fort, market has taken this with both the hands. As we have more clarity, a lot of clarity has emerged overnight. Today is the last day. I believe by this evening or tomorrow or this week, or maybe possibly in the next couple of weeks, we'll have a white paper giving clarification about all the
Gaurang, I'm going to let you finish your thought, of course. To just give me a few seconds, I'm just going to address market open. Let's take a look at where we've ticked off for the morning. 0.75% higher. So we are seeing a gap up open. I don't know, Gaurang, if you were expecting more cheer. I'm going to come to you on this because, as you said, post the announcement, we were probably already seeing some amount of a tick coming in. Nifty Bank also trending higher. We've got... we've got, of course, auto in focus, big time. We've got consumer durables in focus, even some of those insurance counters from the wider market. So we'll pull those up today. But just first trades on your screen, the auto index is up 2.5%. Pull up M&M, pull up Eicher, pull up Maruti, Escorts to just take a look at some of those stocks because that's really where we're seeing a lot of action this morning. And of course, you've also got an HUL at a 52-week high and ITC following suit from the consumer basket. So we'll just pull up some of those stocks. Yes, Maruti up about 0.5%. Let's take a look at Escorts. Let's take a look at Mahindra as well and pull those up for you on your screen. Just important to see how some of these stocks are reacting post the GST news coming in yesterday. Some big moves being seen across the board on some of these counters. Eicher's up about 3%. That's a big one as well. And we also got some insurance stocks from the wider market. Sticking to auto for a moment, let's pull up Ola Electric as well and see how that's doing. Escorts, of course, on the tractor play is seeing some strong moves coming in. Ola Electric is actually up 3%. It's crossed 70 rupees now. So that's a big move on Ola as well this morning. So a lot of focus. It's been a big week for auto post sales numbers. Now the GST news and the flip coming in on that front. So lots of action there. Gaurang, let me come back to you. Let me allow you to finish your thought and also, of course, process the kind of reaction we're seeing on opening.
Well, so Aabha was mentioning, there was excitement from the time the announcement was made. We've seen rallies in FMCG, autos, consumer discretionary. We've seen rally in power, insurance. Basically all the, essential items that one needs. Possibly now that, things are getting out in public domain, you might see a little bit of profit booking purely from a short to medium term point of view. So if you're a trader, I think you should possibly, there is a good old saying, Aabha, in the market that buy on rumors and sell on news. So possibly, might see a little bit of profit booking. But long term, I think this is going to play a huge role in terms of stabilizing the economy at the same time, giving a decent amount of push to the consumption. And of course, it remains to be seen what is the pass-on factor from the sectors and the companies which are going to get benefited out of this GST cuts. So long term still remain positive, but I think short to medium term, a lot is there in the price now. So maybe, if one can possibly take a breather now, let clarity come, and then possibly take a fresh call on the sectors that are going to get positively impacted by the GST cut.
Okay, wise words coming in there from Gaurang, setting the tone really for what we're seeing playing out in the markets this morning. Let's also get in a reaction from, okay, we'll go across to that a little bit later. But we've got some news coming in as well. Of course, you know, what we're looking at when it comes to the index. Sensex is now up about 900 points. The Nifty up about 270 points post the big news on GST. Remember, these are historic reforms. We're already seeing this play out politically in terms of, you know, the timing of it and questioning the government, etc. But this is critical. It's a critical boost coming in economically currently to boost consumption and especially give some relief to some of those industries that have been hit by a lot of the back and forth on the tariff front as well. And we are expecting to see, you know, it contribute meaningfully to the government's balance sheet as well. So as Gaurang said, the long-term impact in terms of boosting consumption and actually seeing core inflation come down is going to be, is expected to be a real and positive boost for the economy. And also coming in, of course, just ahead of festive season. Like we said when we just kicked off the show, they didn't wait even 2 days. They announced it straight away post the meeting, and these moves are expected to be implemented swiftly as well. Staying on the GST news for a moment, let's take a look at some of those consumption names, Gaurang. And of course, apart from the fact that HUL and ITC are up and up strongly this morning, it's likely to impact all the staples, Britannia, Colgate, Nestle, Tata Consumer, the entire, you know, basket. If we just go deeper there for a moment, you know, how do you see the play on consumption rolling out? And in terms of specific stocks or particular segments within that basket, are you going to be looking at something in particular?
Well, so before I go into stock specific, Aabha, a small disclosure. All recommendations are a part of our research team recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest either. But we give recommendations to our clients on similar lines. They might hold their investment interest. So now coming on to your question, well, I think first of all, a lot has improved for the entire FMCG sector, which is of course part of that, you know, non-discretionary. You need to spend for your day-to-day consumables. Last year and before that, there was an uptick in terms of input cost, that is raw material. That has come down significantly to a great extent. Operational rationalization and efficiencies have actually added to the profitable margins expanding. And more importantly, Aabha, I think that along with, of course, this GST push, I think what the Honorable Finance Minister did in the budget, 12.75 lakhs, no tax. Along with that, you have a very decent monsoon. So you're going to have a huge demand push up coming in from semi-urban and rural India. That will take care of the volume growth. And if volume growth is taken care of, I think you will have a very decent profitability number coming in from the FMCG sector. So we are positive on HUL, ITC, Godrej Consumer, Tata Consumer, Dabur, Marico, Nestle, Britannia, and the list goes on, Aabha. Along with that, also positive on consumer discretion, non-discretionary and discretionary items.
Okay, great. We also have the first reaction coming in from Hisashi Tekuchi, the MD and CEO of Maruti Suzuki India. Remember, Maruti is India's largest small car manufacturer. Let's hear from him how the GST reforms will impact sales.
Thanks to the government, strong push by the GST reform, I think market outlook is quite positive towards H2. And I believe the market will show the strong revive, and I think strong growth will start happening in H2 after GST reform.
Okay, we're continuing to dissect the impact across sectors. Let's pull up some of those hotel stocks for you as well this morning. Good move coming in there. Lemon Tree, Royal Orchid, so mid-size hotel counters are doing well. Remember, rooms below the 7,500 rupees a day category will now have lower GST. So it's immediately impacting the mid-size segment, the mid-tier segment. So Royal Orchid Hotel is up 2.5% right now. Lemon Tree also doing good this morning, and it's up about 3% higher. So gradually, we're just taking you through the impact across some of these segments. Loads of sectors and loads of companies that are likely to be impacted positively on the back of this. Now, let's take a closer look, whether it's consumer durables, ACs, TVs, dishwashers. We've seen rates cut to 18% from 28%. That means a demand boost for Voltas, for Havells, Whirlpool, Dixon, Amber, and we'll continue to bring up some of those names for you as well. But a huge positive, whether it's for cement names across the board, and we'll talk to Gaurang about that in a moment. And of course, we were just discussing those FMCG stocks as well, and we're already seeing that play out. Remember, beverages, tobacco, aerated caffeinated drinks, these will still be taxed and higher at 40%. So it's a negative coming in for something like a Godfrey Phillips on the tobacco front. Agriculture and fertilizers, tractors, irrigation equipment, all of these also will see a lower rate cut down to 5% as well. Positive, as we've been discussing, for an M&M and Escorts, Kubota, Coromandel, Chambal, GNFC, so fertilizer stocks will benefit as well. Coal and power, GST on coal and lignite has been hiked to 18% from 5%. So there will, of course, see a reverse impact coming in. Now, the cost push is also negative for NTPC and JSW Energy. So from a market standpoint, important to just flag that for you as well. And renewables, solar, wind, biogas devices, these will now be taxed at 5%. So positive for Suzlon, Inox Wind, and Tata Power. So NTPC is just marginally in the red today, but let's pull up a Suzlon, an Inox Wind, a Tata Power, and we'll see if some of those are reacting as well. I think the major play this morning in the markets is clearly the consumption story, and perhaps some of the other information is yet to sort of be processed by the markets. Suzlon's up about 8.8% this morning. We've got pharma, of course, either exempt or taxed at 5%, so positive on some of those pharma names, of course, and paper, packaging, education, these are now exempt. So that's a positive for JK Paper, for ITC, and so on. Gaurang, I'm just running through a whole host of stocks and sectors here, but which one's catching your eye and which are some of the other, even Gaurang smiling. Yeah, it's a huge boost. So which are the other segments that you feel will see a longer term impact? JK Paper this morning's up 4%, so clearly markets are liking that one.
Well, I think cement also, Aabha. I mean, the list can go on, Aabha. I think we can possibly talk for a long time on this because there are a lot of sectors, a lot of products, goods and services that will come under this as we get more clarity. But I think cement was something that was a long-standing demand from the industry to bring it under a lower tax bracket. It was at 28%, correct me if I'm wrong, Aabha. This is one sector that normally not many people speak about, given the fact that you have huge infrastructure push. Either it is the government at the center or government at the state. You have real estate sector doing actually doing very, very well.
Yes.
Say in real estate sector, Aabha happens to be the second largest consumer of cement, whatever is produced in India. And along with that, I was listening to the management of L&T, and they're quite confident and they are quite positive about private capex getting back on track. And so effectively lowering GST slab for cement and the kind of consumption demand that is there, along with, of course, lower cost input. I think cement sector is also going to do quite well. Of course, other than that, I think consumer durables. This is where the aspirations of rural India is going from maybe a cooler or a ceiling fan to maybe an AC, and this at ground level, Aabha. So I think all these are going to get positively impacted.
Okay. Gaurang, I just want to pull up Escorts again. I know we've talked about it, but the kind of impact is the top gainer really right now, and it's clearly the the play on taxes on tractors. But not only are we going to see a good monsoon, lower GST, we're now going to see lower interest rates also. So clearly, it's seeing a boost across all of these cues. 11% higher on an Escorts. Just a quick call on this one.
We have been positive on the entire auto pack, Aabha, right from two-wheeler, three-wheeler, four-wheelers, commercial vehicle, tractor, agri equipment, earth-moving equipments. In fact, Escorts Kubota are not only tractors, but they make a range of earth-moving equipments, which is also plays a very crucial role. So we've been positive on Escorts Kubota for some time now, not very long ago, given the kind of opportunity that exists.
All right, Gaurang, thanks so much for joining us this morning. Great having you with us here on the show. All right, let me also go across to Karishma Asudani. She's been tracking the news. She's been on ground and has, of course, been tracking all the insights and the developments leading up to this as well. Karishma, take us through all the latest and really how this is now going to be implemented and how quickly.
Aabha, we were the first one to bring all of these news rates to our viewers, and bang on, most of them have been announced by the GST Council yesterday, approved by the GST Council. The big news is, of course, on the fact that they have simplified the whole structure and brought it down to 5 and 18%. The fact that now 5% slab will house in a lot of common household items, which is going to be very beneficial for for the middle class, and 18% has also seen there has been a major shift of goods from 28% to 18%. The 40% slab remains, but it's still lesser than what it was earlier, because if you see a 28% slab which exists currently plus a cess which goes on to close to about say 22% was resulting in a 50% total tax. So even the sin goods and demerit goods and high-end premium luxury cars, they'll be paying lesser than what they have been currently paying. From September 22nd, the idea is to kick this off, but the 40% slab goods will take some time to be implemented with the new rates, and that is because of the ongoing compensation cess exercise.
All right, Karishma, thanks so much for joining us with that. Tracking the big news for you this morning, it's all about those GST reforms, historic reforms coming in overnight. Market seeing a very nice, strong, healthy response to that, up about 175 points right now on the Nifty. And remember, it's also Nifty expiry today, so some amount of profit booking expected a little later in the day, according to Gaurang and some of our other experts. But currently, we are definitely seeing a reaction to some of that positive news coming in. Now, there are also reports that the cut in GST rates on food and the agriculture sector could help trim the government's subsidy burden. While there's no official report on hard numbers available, reports highlight that reducing GST on tractor, parts and key agricultural machinery from 12% and even 18% to 5% will lower acquisition costs for farmers and reduce the subsidy amount needed under various schemes. Biopesticides, micronutrients, drip irrigation systems and machines for soil preparation all are now in the 5% GST bracket. This makes agricultural machinery and inputs more affordable, which in turn reduces the amount of government subsidy required to make these products accessible to small and marginal farmers. Let me go across to Bipin Sapra, leader in direct tax policy EY India, who's joining us this morning. Bipin, thanks for being with us. Tell us what you're hearing on the subsidy burden and what the math is looking like there, and will the government really see some relief on that front?
So, I think we are, so what we are hearing and what we heard last night was that there is not too much of revenue shortfall which the government is looking at. Okay. There was a figure of 48,000 crore which both the FM and RS quoted in their speech, and they were on the basis of 2023-24. How soon the consumption boost will happen, the buoyancy will come back, and will at the end of the year, do we actually need any support internally to impact the subsidy bill, requires to be seen. My view would be that I think given the huge number of changes, it should quickly build into a consumption boost, and the amount of shortfall should not be as high as what is being anticipated all around.
Okay, so a lot of the concerns, Bipin, in terms of, the kind of compensation to the states, added cess, so forth, a lot of those concerns pre the meet seem to have completely been, waylaid for now. Would you say that overall, the likely, eventual impact of this is going to be net positive then for the finances of the government?
That's the intention of the government. Ultimately, it's for the people benefit, the whole country benefits, and the economy benefits as such. What we need to realize is that when we calculate revenue shortfalls, we do not calculate that how it is going to be, how this will drive up the demand, because that's a separate calculation. And if we were looking at how that will boost consumption and then a GDP boost, there we look into all of those things. So from our perspective, so immediately, maybe if in the month of October, there might be some shortfalls, but it will get picked up. And in October itself, there would be a lot of sales happening on Diwali because of these things. So I think it's a factor of time. I don't think there would be too much of shortfall by the end of the fiscal year.
All right, stay with us, please, Bipin. Let's also go across to some comments coming in after the big GST reform. We spoke with finance ministers from Uttar Pradesh, West Bengal, Telangana and Jharkhand. Here in some of those comments.
यूनानिमसली 5% और 18% दोनों अप्रूव हो गए।
जी हाँ।
और रेवेन्यू स्टेट लॉस पर जो दिक्कत थी वो भी अप्रूव हो गया।
नहीं, रेवेन्यू लॉस जो भी होगा फेस करेंगे। लार्जर इंटरेस्ट ये था कि कॉमन मैन को फायदा हो, टैक्स कम हो, टैक्स का बर्डन कम हो, ये लार्जर इंटरेस्ट था, इसलिए सबको यूनानिमसली हो गया।
Finally, apparently there has been a consensus achieved. I want to know if you're satisfied with the fact that even on the revenue loss, ma'am,
we have spoken whatever we had to say. We have to.
But are you satisfied?
Of course, yes. We are all for the common man and middle class families.
Yeah.
So,
But on the revenue loss?
That, apart, that also we brought to the notice of the council.
Sir, big concerns there were about the revenue loss especially. Have they been satisfied now?
जीएसटी काउंसिल के चेयरपर्सन और पूरे सदन की भावना इस पक्ष में नहीं थी कि जीएसटी जो ये कंपनसेशन सेस है वो दिया जाए, वो लोग नहीं उसके पक्ष में थे। तो हम लोगों ने भी अल्टीमेटली कहा कि ठीक है।
Vipin, if we, take a look at, the overall impact as well on some of these taxes, are there any segments where you feel, perhaps the government can follow through with some additional measures as well? They've actually taken into account a whole host of much sought-after reforms from the industry, and they've addressed those. But the net impact, for example, on some of these small businesses, while the finance minister has said it will, of course, create an ease of doing business for them and so forth. Do you feel that there are some other follow-on reforms that can possibly also come in?
I think that's a very apt question to ask at this moment. And the government has been talking about a whole package of GST 2.0.
Right.
Some of those structural reforms have come through. So we'll see a reduction in classification disputes, earlier refunds, inverted duties going away, simplified returns. So a lot of it is coming through. A lot also needs to be done to reduce the cost of compliance of common taxpayer. And that would be coming from multiple audits which are happening, streamlining the audit procedure itself, decriminalization of offenses. It's ultimately everybody wants to pay the tax, and only if there is an outright evasion, those things should be decriminalized. Those things should be really prosecuted. But for others, the fear of criminalization itself is a deterrent to join the normal GST process. So there are a lot of areas which and credits. Credit rationalization, a large part of credits are still held up and are being blocked because of certain restrictions like real estate, on cars, on input services, various services, including insurance and others. So a host of items which need to be rationalized from a credit perspective are also there. And that in whole would bring the GST 2.0, which is what the government is looking at.
Fantastic. In fact, since you mentioned insurance, I just want to pull up some of those insurance stocks as well. They are reacting post some of these moves coming in today. So insurance stocks are definitely trending higher at this point of time. We've also got all of the mid-tier hotel companies doing well. So Lemon Tree, Royal Orchid. So we've got footwear also moving this morning. We've got names like Varun Beverages moving in the broader markets. So a whole host of stocks in the broader markets that are moving. And of course, the big moves continue to be on auto and FMCG. Both of those majors are actually doing pretty well. Varun has probably slipped a little bit there, but overall, we're seeing a lot of traction coming in. Vipin, just final comments from you as well as we close off the show. In terms of, we've been talking about how the combination of now the lower GST rates, as well as, of course, how this will lead to lower interest rates with core inflation coming down, is likely to give a big fillip to the economy. Any numbers you have in mind as to really what we could see as the resultant impact of this, in a couple of quarters from now?
Yeah, I think while we were doing those initial calculations and the revenue loss number is the one which really determines as to how much GDP impact would really come in. and the numbers vary from 0.5% to 1%. Depending upon how much shortfall, how much reduction in rate actually gets passed on to the customer. But at least 0.5% of GDP would be par to say that's where the benefit would be coming in, and that I think is very substantial. And any what we were looking at the current geopolitical shocks coming in and the reductions and the impact on the GDP because of that. If not really taking over from there, but at least counter all of those, and we should see a normal economic growth happening, irrespective of whatever shocks, external shocks, the tariff shocks which were coming in earlier because of that.
Fantastic. Bipin, thanks so much for joining us and taking us through all that good news this morning. Remember, keep an eye on those auto stocks. Keep an eye on your FMCG majors. We're seeing a lot of traction there today. We've got Escorts, Kubota, the top mover in the markets right now. We've got stocks hitting record highs as well from the auto pack, 52-week high as well on an HUL. So lots of action and, of course, also in the broader markets as well. With that, we wrap this edition of the Business Today show. Thanks so much for joining us and stay tuned. Lots more coming up.
Moto G96 5G. All eyes on you.
I choose a world where we dream, and the limit is the sky, and this world is